Right now, as you watch this video, there is a building somewhere that is making more money per square foot than almost any other building on the planet. It does not sell anything. It does not manufacture anything. It does not have a storefront or a sign outside. It just sits there, humming quietly and prints money around the clock. It is called a data center. And in the next 10 minutes, I am going to show you exactly how it works, who owns them, how much they actually make, and why the people who understood this business early are now sitting on some of the most valuable assets in the world. Stay with me. Before we talk about the money, let us make sure we understand exactly what we are talking about. Because most people hear the words data center and immediately think it is something complicated and technical and far beyond their understanding. It is not. Here is the simplest possible explanation. Every time you watch a video, every time you send a message, every time you search for something online, every time a company processes a transaction or stores a file or runs a piece of software, all of that activity needs to live somewhere physically. It cannot float in the air. It cannot exist only as an idea. It needs actual physical machines, servers that store, process, and send information constantly. A data center is simply the building that houses those machines. Think of it as a warehouse, but instead of storing boxes and products, it stores information. And instead of forklifts moving inventory, it has cooling systems, power supplies, and fiber optic cables moving data at extraordinary speeds. Every major company in the world, every bank, every hospital, every government, every technology platform, every streaming service needs data centers to operate. The question is not whether data centers are valuable. The question is how valuable. And the answer will genuinely surprise you. Here is where the economics start to become extraordinary. The global demand for data is not just growing. It is accelerating at a pace that most infrastructure is struggling to keep up with. Consider what is driving this demand right now in 2026. Artificial intelligence systems require enormous amounts of processing power to train and operate, more than almost any previous technology in history. Every AI tool, every large language model, every intelligent system running anywhere in the world needs data center capacity to function. Cloud computing, where businesses rent computing power instead of buying their own servers, is now the standard operating model for companies of every size across every industry. Video streaming, digital payments, e-commerce, remote work, smart city infrastructure, connected vehicles, every single one of these growing industries feeds directly into data center demand. The International Energy Agency estimated that global data center electricity consumption would double between 2022 and 2026, not because data centers are wasteful, but because the world's appetite for data and computing power is insatiable and accelerating. What this means economically is straightforward. The asset that houses all of this demand is becoming more valuable every single year. Now let us talk about the business model, because this is where it gets genuinely interesting. Data centers make money in several distinct ways, and understanding each one helps you understand why this is such a powerful business. The first and most fundamental revenue model is called co-location. This is where a data center owner builds and operates the facility. The building, the power, the cooling, the security, the fiber connectivity, and then rents space inside it to businesses who need to house their servers somewhere reliable and professional. Businesses pay monthly fees to park their equipment inside a professionally managed, secure, climate-controlled environment. These fees are consistent, long-term, and predictable, the kind of income that asset builders genuinely value. The second revenue model is managed services, where the data center not only provides the space, but also manages the equipment, handles the maintenance, provides technical support, and essentially runs the technology infrastructure on behalf of the client. This commands a significant premium because it removes the complexity from the client entirely. The third model is cloud services, where technology companies build massive data centers and sell computing power, storage, and software as a service to businesses and individuals who access it remotely. This is the model behind the largest technology companies operating today. All three models share one critical characteristic: recurring revenue. Clients do not sign one-time contracts. They sign long-term agreements, often 3, 5, or even 10 years, because moving out of a data center is enormously complex, expensive, and disruptive. Now, the honest question, what does it actually cost to enter this business? And the honest answer is, it depends enormously on scale. A small edge data center, a compact facility serving a local region, can be built for between $5 and $20 million. A mid-sized commercial co-location facility serving enterprise clients typically costs between $50 and $200 million to build and equip properly. A hyperscale data center, the massive facilities operated by the world's largest technology companies, spanning hundreds of thousands of square feet, costs between $1 and $5 billion or more. These numbers sound enormous, and for an individual starting out, they are. But here is the insight that matters most. You do not need to build a data center to participate in this economy. The infrastructure of the digital world is now accessible to ordinary investors through publicly traded companies and real estate investment vehicles that own and operate data center portfolios. The underlying principle is the same one that applies to every great asset class in history. You do not always have to own the whole building to benefit from what the building produces. Understanding how the economics work is the first and most important step, regardless of which path you ultimately choose. Let us look at what makes this business genuinely profitable once it is operational. The two largest operating costs of a data center are power and cooling. Servers generate enormous amounts of heat and require constant cooling to operate reliably. Power costs can represent 40 to 60% of total operating expenses. This is why the most sophisticated data center operators obsess over something called power usage effectiveness, a measure of how efficiently a facility converts electrical power into actual computing work. The best-run facilities in the world approach a ratio of 1.1 to 1.2, meaning that for every unit of power that enters the building, almost all of it goes directly into computing, rather than being wasted as heat. Beyond power, the other major cost is connectivity, the fiber optic infrastructure that allows data to flow in and out of the facility at speed. Once these infrastructure costs are covered, and they are substantial, the profit margins on a well-located, well-operated data center are remarkable. Operating margins in the data center industry typically range between 30 and 50%. Compare that to a traditional retail business operating at 5 to 10% margins, and you begin to understand why capital has been flowing into this sector at an extraordinary pace. In data centers, as in most asset-based businesses, location is one of the most critical determinants of value, and the factors that make a data center location valuable are not what most people would guess. The first factor is power availability. A data center needs enormous, reliable, affordable electricity. Regions with access to stable power grids and competitive energy costs attract data center development consistently. The second factor is connectivity. A data center needs to be physically close to major fiber optic network routes to minimize the time it takes for data to travel, what technologists call latency. The third factor is climate. Cooler climates reduce the energy cost of keeping servers from overheating, which is why some of the world's largest data centers are located in Scandinavia and Iceland, where the ambient temperature provides natural cooling. The fourth factor is political and regulatory stability. Companies storing sensitive business and personal data need to know with confidence that the legal environment surrounding that data is predictable and protective. This combination of factors, power, connectivity, climate, and stability, explains why certain regions have become global data center hubs, and why land in those specific areas has appreciated dramatically as the industry has grown. One of the most interesting aspects of the data center industry is the diversity of people and organizations that have built it. The industry was not created by a single visionary or a single company. It grew organically from the intersection of telecommunications infrastructure, real estate development, and technology demand. The early data center builders were often telecommunications companies that realized their existing infrastructure, buildings, power supplies, fiber connections, could be repurposed to house the growing internet economy of the late 1990s and early 2000s. Over time, specialized real estate operators emerged who understood that owning and operating digital infrastructure was fundamentally a real estate and asset management business wrapped inside a technology context. Today, the industry is shaped by large, specialized operators, major technology companies building proprietary facilities, telecommunications infrastructure providers, and a growing number of smaller regional operators serving local and national markets.
What is consistent across all of them is a recognition that reliable digital infrastructure is not a luxury, it is a necessity. And businesses built around genuine, essential necessity tend to be extraordinarily durable over time.
Where does this industry go from here? The honest answer is up, significantly and consistent. Artificial intelligence alone is expected to drive data center investment of trillions of dollars globally over the next decade. Every AI system requires training, a process that consumes extraordinary amounts of computing power. Every AI system in deployment requires ongoing processing capacity to respond to the millions of daily interactions it handles. The entire artificial intelligence economy, which is reshaping virtually every industry simultaneously, runs on data center infrastructure. Beyond AI, the continued global expansion of internet access, the growth of smart infrastructure in cities, the digitization of healthcare, education, and government services in developing economies, all of these represent additional layers of demand being placed on an infrastructure that is already operating near capacity in many markets. The constraint is not demand. The constraint is the speed at which new capacity can be built. Permitting, construction, power grid upgrades, and equipment supply chains all take time, which means that existing, well-located, operational data center capacity is genuinely scarce relative to current demand, a dynamic that consistently favors asset owners. So what does all of this mean for someone who is not a billionaire technology company and not a large real estate developer? It means several important things. First, understanding where the world's essential infrastructure is moving is one of the most valuable things any financially aware person can do. The industries that own the infrastructure of the future tend to generate the most durable, long-term wealth. Second, the data center economy is accessible to ordinary people through publicly traded real estate investment trusts that specialize in digital infrastructure. These vehicles allow individuals to participate in the economics of data center ownership without the capital required to build one. Do your own research carefully. Understand what you are putting your money into and invest with patience and long-term thinking, not with the hope of quick returns. Third, skills in data center design, operations, energy management, and technical infrastructure are among the most valuable and well compensated in the global economy right now. If you are in the early stages of building a career, these are fields worth understanding deeply. The digital economy needs builders, operators, and managers at every level of the infrastructure stack. The data center industry is one of the clearest examples of something Mr. Max Wealth comes back to again and again. The most durable wealth in the world is almost never built on what is visible or fashionable or exciting at the surface level. It is built on what is essential, on what the world genuinely cannot function without, on infrastructure that serves real human needs at scale. Data centers are not glamorous. You cannot photograph them for social media. They do not have a story that fits in a caption, but they power virtually every piece of the digital world that billions of people depend on every single day. Understanding that, truly understanding it, is the difference between chasing trends and building a foundation. I am Mr. Max Wealth. The most reliable wealth has always been built on what people cannot live without. See you in the next one.